Welcome back to our weekly market outlook. I'm Mr. Wags from Forex SPV, and as always, as each new week beginning, we do our analysis, we break down key market structure and anticipate on a few pairs to prepare ourselves for the upcoming week. So today we are going to look on the pairs that we following from last week. So let's start with GBPUSD here. So this was our anticipation as for the last week. I remember the market was at this point when we were doing our analysis, and our anticipation is for the market to continue going up. So as a trader, you had an opportunity to take a buy trade here, because we had a retracement coming back to this large quarter point, and at this large quarter point is where they reverse. So on the 15 minutes, there was a very good pattern there. There was a very good pattern for you to take a trade. So here it is. And the market did buy. And on the next day, we also had another opportunity to buy just as the London session was opening and just as the New York session was opening. That is on Wednesday. And this here now was a clear move. So let us look on what we should expect on GBPUSD this week. So here we still have net long. We still have a bullish market structure here. We still have a bullish market structure according to the monthly time frame, according to the weekly time frame. Look at how last week candle has been closing, but then this is like a consolidation, eh? This is like a consolidation because this here it creates a range, a range market within lower time frame. So we have this range market here. So this is a consolidation, but then we should expect a breakout going up, as the market structure shows that we are still on a bullish momentum to meet this area here. So this is our target. So on the hour 4, you can see we have a shark fin around the level middle, implying like a reset. So we are still bullish on pound USD. So we are still bullish on pound USD. And this move here, we had like 1, 2, 3. So when you see the market behaving like this on a lower time frame, this is a few pips move. So the ADR times 3 here is 234. But you can see here, the market moved only 170 pips and reversed. And also here, the market moved 195 pips and reversed. And we see 1, 2, 3 levels. And you can see here levels, 1, 2, 3. So a market like this is a consolidation market, and it simply implies that a reversal is about to occur. So once price reaches this level, which is a resistance level, there is where I am expecting for a big reversal to occur. So right now, you can see smart money is simply distributing. So we are still on the distribution phase before accumulating at the top, where is our area of resistance. So let us draw now our ADR boxes. So our ADR is around 78. So that's ADR type. So ADR times 2 and ADR times 3. And here we are having our area where the market started its move. So I did a W here, just like what we did here, in order for me to take a trade. So that is on GBP USD. Now let us look on Euro USD. So on the hour time frame, so we had a peak here and 3 times ADR, and you can see right now it has been completed. So the cycle is completed. So this is Euro USD monthly time frame. It's around the 200 EMA, and it has not broken the 200 EMA yet. So the 200 EMA is seems to be a strong area of resistance there. And on the weekly, you can see the 800 EMA is there. Okay, so and still the market is like creating an M here, forming an M. So the market is like forming an M, and that can be our area of resistance, and a change in market structure would occur. But as for now, we are still bullish, eh? As for now, we are still bullish. The market has been moving. We had like this is a daily peak formed, and we had the first level, the retracement. So this here is like our first level, which is a peak reset, and I should expect another level here, the peak reset. So that is my anticipation. So on the hour, you can clearly see it is around the area where we are looking for a peak reset. So if it gives us that W, then our peak reset is good, and we'll be looking to buy Euro USD. Euro JPY, as you can clearly see, our anticipation from last week. Anticipated for a peak around the 800 EMA, the market will go up, and you can see the market is moving very well. And on the daily time frame, there was an order block here that the market was supposed to reach. Okay, let me load the template again. So on the monthly time frame, this is our support area, and the market structure is bullish. We are looking to find that resistance area above. You can see on the weekly, the last week candle was very good, a very good bullish move. So after this consolidation, this is a long-term accumulation, and right now, the market has started moving on Euro JPY. Okay, so here we have on the daily time frame, and the market has started its first move, and it's on the second move, and we should expect the third level here. So right now we are on the second move, and we are still bullish, yeah? We're still bullish. Now let us look on how many pips it has moved so far from this area. So our ADR is 113. So it is 119. So the average is around 116. So ADR times 1, it has moved about 2 times ADR. So it has moved about 2 times ADR. Eh? So right now we should expect for a retracement as a stop ant. So stop and flow rise, that is what we should be expecting right now. Stop and flow rise. And this is a good area. It is the low of Friday London session, so this is a session low. So if it targets this area, and that will be good. Give us a pattern, and we take that buy trade. That is Euro JPY. So this is pound card. Pound card has been in a stiff consolidation. You can see it here since the sharp move that occurred last week on Friday. You can see, I mean, on the previous week, on Friday we had that move, a sharp move, and then you can see the market was just consolidating for the past week. Okay, so on the higher time frame, as we were following GBP card, we saw that we are still on a bullish market structure. We are still on a bullish market structure, and we need to find this resistance area here. On the weekly, you can see we're still on the bullish market structure, although the market is moving very slow. The market is moving very, very slow. And this is on the daily. You can see this is how stiff the market has been consolidating. Okay, so on the hour 4, we're having a gap lay here as a sign of a reversal. And the TDI had already shown a shark fin at this level, although we are not on the lowest level that the market would reach. So price has been consolidating on the pound card. Yeah. So when this accumulation is over and the market actually establishes a trend, where is our anticipated move? So I'm expecting for the market to be bullish on pound card after this accumulation here. So I'm expecting for the market to be bullish. And as for today, the market may find liquidity below this low. So the market may come all the way down here to find liquidity below this low. And this will also be a fake move. So a week beginning fake move. And then the market would start its journey on a bullish trend. And USD ZAR. So USD ZAR has been on this area of support, I think 2 weeks now. I've been anticipating for the market to reverse, but then can see the consolidation and the liquidity rate that is occurring here. So it is forming a low, it is breaking it, forming another low, breaking it. So simply finding stop losses and sell stops and buy stops. So it is breaking also the highs and then selling. So what does this mean? This means that the market is on the accumulation phase, where the market is consolidating and having stop and liquidity rate. So that is where the market is at on USD ZAR. And I am still anticipating and I'm still confident that the market will give us a good pick for us to take our buys. So that is still my anticipation. And as for now, the market had was the first liquidity rate, so breaking this low. And this here is the second liquidity rate. And it did break this low and it did break this area of support. So right now, I can see that USD ZAR is good to go. So for this week, that is my anticipation on USD ZAR. And this is gold, and this was a trade taken during NFP. So you can see how the market did sell. So we had a pattern here. We had this first move, but then this was an EMA combo trade, but you can see we had a combination of EMAs here, although they are not like close enough, but then the market did form a pattern around this zone. And when EMAs are close enough like this, it means that retail orders are around here. So many retailers will be putting orders as most retailers use the EMAs. So this here it's liquidity zone for market makers. So you should be expecting the market to steer clear away from this area. And the market usually moves very fast once this occurs. And you can see here the candles, how the market moved. It was very fast move. So the NFP candle is this one. So the NFP tried to wipe stops from both ways. So if you're a gambler here putting buy stops and sell stops, you'll be in a total loss on this trade. So after seeing this pattern with the entry confirmation, the 5 and 13 crossover, and you can see this is the last candle before NFP. So we usually expect right before news release, we usually expect for the market behavior to show as a false move. So if we are expecting a sell on gold, we should be seeing bullish move right before news release. So that occurred here. So this was also a confirmation for us. And there is where we entered, and we had a few minutes to wait, like an hour here, like 60 minutes. So 1, 2, 3, 4, yeah, that's 60 minutes. And then the market eventually moved. So the market has established a peak here. So you should ignore this. The market has established a peak here. On gold. A peak formation high. Yeah. The market has now established a peak formation high. It has moved the first level. And you can see here we had this high. The market came to this level, formed a support. We had like 1, 2 levels right after breaking this high. Yeah, this was a butterfly, yeah. So right after breaking this high, right after raiding the buy stops and the stop losses for those sellers who have entered here, the market reversed. So this is a very good peak in terms of how the dealers grab liquidity. So you can clearly see it has already moved the first level and the second level. Now we should be expecting for level 3 here. So the first and the second level. And as for now, should be expecting for a third level. So a stop and high drop. And that is what I am anticipating on gold as of this week. So last week it was the NFP week, but also we had several other news releases, including the Euro rate statement and the Bank of Canada rate statement. But as for this week, we only have one critical uh, fundamental to look at, which is the CPI for the dollar. And that is on Wednesday. That's where we'll have the news, but it should be a calm week, a good trading week. So you should follow the analysis that we have just done. So if you're part of our Signal group or our mentorship program, so there is where we take action. But even if you're not, I hope this analysis gives you clarity for your trades this week. So don't forget to like, drop a comment, and subscribe for in our channel. And if you want to join us or for training or for signals, you can simply DM us on Telegram or on WhatsApp, and I'll be there to help you and assist you. So till then, have a good trading week.